Hello, today's topic is consignment account. Consignment account. It refers ledger account. Name consignment account. Debit side rupees, credit side rupees. That is a ledger format. And name of that ledger account is consignment account. What is consignment? Definition is given: when goods are sent by owner to his an agent on the condition of selling goods on his behalf, for which an agent will be given commission, it is called consignment. In short, consignment is to send goods to an agent for selling purpose. Owners owner of the factory wants to enhance his business to another place. From this point of view, owner appoints an agent in different places, and through an agent, owner expand their business. Sending goods to an agent, this is a consignment. Try to understand. Not selling, consignment, to send goods to an agent for selling purpose, that is called as consignment. Owner is called consignor and an agent is called consignee. So consignor is there and consignee is there. Two parties is must for consignment. Okay. We take characteristics one by one. Number one, goods sent, not a sale. Goods are sent to consignee by consignor for selling purpose. It is sending process, not directly sale by consignor to customer. Try to understand this concept. Goods sent, not sale. Next, consignee gets goods. When consignor or owner send goods, that goods gets consignee. So consignee gets goods. Next, commission for consignee. When consignee sell goods, he gets commission on selling goods. After all, he work for earning and he gets commission on selling. Next, agreement. This is an agreement between consignor and consignee. Invoice pro forma is sent with goods. Written agreement is there. Terms and condition is there. According to that pro forma or written instruction, two parties agree to make such transaction or business. That is a very important role of agreement. Without agreement, one cannot go for further. It is the initial stage. Next, risk of loss remains with consignor. After all, consignor is owner. And those who are owner, he has certain responsibility of whole losses. He has to bear losses. Consignee will not bear losses because he is not owner. Total burden of loss on consignor. Next, book of accounts. Owner or consignor maintain his own book. He create consignment account and total transaction is put on this consignment account, debit side, credit side, and consignor's account is there. Total transaction relating to consignee, that activities are made in consignee's account. So two types of books are maintained. One books that is consignment account, and second one is consignee's account. Okay, next, expenses. What about expenses? Expenses are made for sale goods. That is expenses, total expenses is paid by consignor. That is expenses, and that expenses is called non-recurring expenses, because the life of goods, only one expenses are taken place, and that expenses by consignor. That is non-recurring expenses. Not any expenses occur again and again, only one time in the life of goods. That is non-recurring. Those expenses are made by consignor. That expenses are called non-recurring expenses. Which expenses? Storage expenses, loading charges, rent charges, advertisement, salary expenses, light expenses, go down expenses, total expenses bears through consignor. What about recurring expenses? Recurring expenses is expenses occur again and again. Goods are there, and some expenses we have to make again and again on same goods. That is called as recurring expenses. If we store goods and we have to pay rent monthly, first month we have to pay rent, Second one, we have to pay rent, same amount on same goods. It means again and again and again we have to pay rent, storage expenses, that is a recurring expenses. Then invoice price. What is the role of invoice price? Invoice price gives proper selling price. With the help of invoice price, consignee has specific right to sell on certain price, which price should be more than invoice price. So invoice price is there. Invoice price is equal to cost price plus profit. Okay. With the help of diagram, we can clear all this concept of consignment account. Try to understand. Here consignor is here. Consignor. Here is a consignee. Consignee. Consignor is owner. This is a loading trucks. Before this process, some expenses are made here. Which type of expenses? Rent, then storage, then insurance, next loading charges, next other expenses, after paid all these expenses, next process is we have to transfer goods from consignor to consignee. That is called as goods sent. This is goods sent. It means we call it consignment. Consignment. This is a consignment. On the way, we have to pay some expenses. That is transit expenses. Those expenses is transit expenses. That is non-recurring expenses. What? Non-recurring expenses. That expenses occurs one times in the life of goods, not again and again. Only one times we have to pay some expenses. Example, freight, tax, after insurance, total expenses are called non-recurring expenses, which expenses occurs on road in transit, that is non-recurring expenses. When these loading trucks reach up to consignee, consignee has to pay some expenses. Which expenses? Unloading expenses. Unloading expenses. If there is a go down on railway platform or any storehouse, we have to pay rent. We have to pay some freight. Freight, insurance, then rent, light, salary, advertisement, these expenses are made by consignee. So consignee send goods to consignee, that is a consignment. And after getting total goods, all expenses are made by consignee. And after this, consignee sell all goods. Sale of goods. After selling goods, consignee gets commission. What? Commission. After getting commission, all expenses which is made by consignee, that expenses are deducted from selling price, and rest of the amount will be paid to consignor.